for the introduction. It's my pleasure to present GMINing Ventures. We're a junior developer company with a asset in Brazil called Tocantinzinho that has 2 million ounces of reserves. We updated our feasibility study in February of last year, showing very robust economics at using $1,600 gold. Obviously, with the higher gold price that we're seeing, I'll show some sensitivities that show the nice leverage that we have to this nice rising gold price that we're seeing. On the back of the feasibility study, we did put in place our financing package for the project for $481 million, which allowed us to bring in some new strategic partners into the company, including La Mancha, who took a 25% shareholding in the company, Eldorado, who maintained 18% interest in the company from whom we purchased the project, and added Franco-Nevada as a partner, who is now a 9.9% shareholder. As you mentioned, the Gignac family, along with our board members, own a significant stake in the company, so very much aligned with our other shareholders. And as you point out, we have a track record of building mines for other companies in our past through GMINing Services, building Fruta del Norte for Lundin Gold, the Marion Mine for Newmont, and Essakane for IAMGOLD back in the days. So in our 2-year track record, 2.5-year track record of creating GMINing Ventures, we've gone from creating the company to acquiring an asset, the Tocantinzinho asset, putting in place our financing and making a construction decision, which we did in September of last year. So all that in a very short time frame. So we're very proud of the progress and speed at which we've been advancing this company. Obviously, our focus now is constructing the Tocantinzinho mine with a view of reaching commercial production in the second half of next year. So just to give you a few highlights from the feasibility study that we produced in February last year, we have a very robust project. It's a simple open pit operation feeding a conventional process plant at 12,600 tons per day. We've updated our CapEx to $458 million, and that is tracking really well as we're continuing to progress into the project right now. What you see is this mine producing 175,000 ounces a year for 10.5 years, with quite attractive all-in sustaining costs of just under $700 an ounce. This project is located in Brazil, in the state of Pará, which has a lot of similarities to projects that we've done in the past in the Guiana Shield. And it's a jurisdiction that we're very attracted to. It's a very mining-friendly state, the second largest mining state in Brazil. And once we're up and running, Tocantinzinho will be the third largest gold mine, primary gold mine in Brazil. The financing package that we put in place last year provides us full funds to go through the construction period. So we have a $481 million package that we put together that included a gold stream and term loan from Franco-Nevada and equity investments from Franco, La Mancha, and Eldorado. And finalizing our package is an equipment financing facility with CAT Finance. So all in all, we have sufficient funds to go through our construction process, construction period, with plenty of buffer to get us through into commercial production. So these are a lot of information on this slide, but giving some details to the financing package. So as you can appreciate, Franco-Nevada is a large financing partner of ours, providing $353 million of financing to construct the mine. This includes $250 million of a stream loan, $75 million term loan, and $27.5 million investment into the equity. To give you a bit of an update on Tocantinzinho, like I was saying, this is a high-quality project. This is a single open pit with a very attractive grade of 1.3 grams per ton. and a life of mine strip ratio that is fairly low at 3.4 tons of waste per ton of ore. As you can see in the sensitivity, we did our economics at $1,600 gold, showing an NPV of 622 million US. If we look at more spot prices of around 2,000, we have essentially a $1 billion project. So we feel that we're right in the sweet spot of the cycle now, with the gold price going up and looking to reach commercial production next year. This deposit consists of a granite intrusion, so it's a very massive ore body, about 150 meters thick, right down the middle of the pit. So it's very low risk from a geological point of view, very simple to mine. We'll be mining with bulk mining methods on 10-meter benches, so something that's not very subject to mining dilution. We essentially do the detail engineering in-house with GMIN services. So we're very advanced on our detail engineering at 62%, which has allowed us to do a lot of the major procurement on the project, which we're very advanced on. We've essentially committed 235 million of our $458 million capex already. So we've secured the major equipment packages that we need for our project, including the mining equipment, the processing equipment, and a lot of the bulk materials that we need to construct the power line to feed this project. We've already received some of the first units of our mining fleet on site that have been assembled and commissioned. We've already started our pit pre-stripping activities, which will continue into this year and into next year, where we essentially generate a lot of synergies for our earthworks movement and our tailings dam construction, where we use our mining fleet. Since we initiated construction, the focus for us has been putting in place our infrastructure. So we're just nearing the completion of our permanent camp facility, which will provide us with 1,200 beds on site. We've also started constructing the transmission line, 190-kilometer transmission line, which will connect us into the power grid, giving us a nice source of clean, renewable power. Currently, we're ramping up our workforce on site. We're currently at 1,100 people, including employees and contractors on our project as we speak. We expect to ramp up to about 1,900 towards July, August of this year. Once we're into full-time operations, we'll have about 650 full-time jobs at the mine. And very important, we've been able to hire from our local communities. So that's very important to be hiring from our local communities, buying services and equipment, stimulating the local economy in our region, and in particular in the state of Pará. So as I pointed out, we've opened up our pit. We've started pre-production activities where we've mined already 590,000 tons in our starter pit. By the end of our pre-production period, our construction period, we expect to have mined around 15 million tons, and in the process stockpiling 2.4 million tons of ore in front of the plant when we are at the commissioning stage next year. This project is essentially a remote but very easily accessible through our access road into the federal highway, the 163 highway. So this is very relevant. We in Brazil were able to buy most of what we need for our project within Brazil and able to truck from manufacturing facilities typically located in the south of Brazil. So not having to rely a lot on ocean freight logistics to bring all the materials and equipment that we need for our project. Just some examples of the access road and bridges that we've implemented to improve access. So that's all been done. So since we started construction, we have made an effort to put in place a strong health and safety culture. We've worked over 800,000 hours now without any LTIs, and obviously that'll be a focus of our company as we go through the construction process, looking to keep people safe while we build this. Our timeline currently is to reach commercial production in the second half of next year. We'll be looking to start our commissioning activities towards the end of the second quarter of 24. So we're currently constructing the power line, constructing the site, and what we show here in terms of critical path is essentially the grinding circuit, which will dictate when we can complete and reach the commissioning stage. To give you an overview, we have a very concentrated shareholder base when you include La Mancha, Eldorado, Franco in management. So very large shareholdings, and after that we have very significant institutional shareholders, including Franklin, ASA, the Lundin Group, CI, and various Sprott affiliates. So when you look at the retail and other investors, there's maybe 17% of our float remaining. So as we stand, we're trading around $1 a share, with 448 million shares outstanding. So about 450 million Canadian. So still very providing lots of room for upside. When you look at our PNAV multiple, we feel that we're in the sweet spot in terms of value creation as we go through the development phase and get into commercial production. And this can typically be seen when we look at PNAV multiples of developers versus producers. They often benefit from a higher PNAV multiple, given that there's a lot of de-risking that's occurred when you go from a developer to a producer. So we see a lot of upside in the re-rating of our stock as we go through the development phase and get into commercial production. So again, I think we're very proud of this track record that we've established of moving quickly into construction and soon into commercial production next year. Typically, many companies take 10 years or more just to go through these various stages. So definitely, I think we're a uniquely positioned company. When you look at projects that have meaningful scale in terms of gold production with CapExes that are reasonable and not owned by producing companies that are fully financed and in construction, there's very few projects out there. So obviously, Sabina has been purchased by B2 a few weeks ago. Artemis just received their permits to start construction, and Marathon Gold that's developing the Valentine project. So very few projects in our space, and we feel that we're a very attractive company at this point for many gold investors. So that concludes the formal part of the presentation. Obviously, we'll be taking a few questions, and if there's other questions that come up, we invite you to reach out to the company. My colleague Jesse Liu Ernstein, who is Chinese, can obviously take questions in Chinese as well, should you reach out to us.
Thank you, Louis Pierre. So just a few questions answered so far. Let's just address the first one from Joy. And he was asking about the geopolitical risk in Brazil. How are you doing to connect with the local government and community? Maybe compared to your Guyana that you worked on that before, right? How's the two places different?
Yeah, good question. Obviously, since we've been working on the project, we've established good relationships with our local government, state government. And through the last election, the state governor in Pará was reelected, and many of the institutions that we deal with are the same people. So for us, there hasn't been a very important change or dramatic change with our government relationships. Obviously, Lula has come to power and is vowed to protect the Amazon and various activities, confront various illegal activities that happen in the Amazon. So we feel that us being a public company that follows the law are really not the focus of any attention from new policies that can come into place. And I'd also point out that Lula has been in power before, where mining has been a very important part of the economy in Brazil and will continue to be so for many years.
Great to hear. The second question coming from Satari is asking if the gold price rises to 2,000 or above, how will it affect your company? I would say probably positively, but what kind of leverage they've got, I guess.
Yeah, definitely a lot of leverage to the gold price. Essentially, when we look at the base case economics of 622 million NPV at 2,000, we're at $1 billion. So we essentially benefit from about 100 million NPV change for every $100 change in gold price. So for us, that's a dramatic increase in value for our project. And we're obviously looking to find additional reserves on our land package, which is quite substantial.
And the next question coming from Gregory, he was asking the cash cost. Was it the 700? Was that the cash cost, or how about the all-in? Do you have any numbers on the all-in sustaining cost?
Yeah, the all-in sustaining that we show in our feasibility study is $681. That's using all the assumptions in the feasibility study. So some of those input costs have gone up since the study, in particular like fuel. So we're in the whereabouts of about $700 an ounce all in sustaining, and that's including mining, processing, G&A, and obviously sustaining capital and some other costs.
Sure. The next question coming from Gabriel, and he's asking, GMIN is fully funded and considering a potential acquiring a second pipeline asset right now. Is there any potential targets already?
Yeah, we're obviously very active looking at other projects, looking at acquiring another asset to bring into the company. So something that's perhaps maybe less advanced that we would spend time developing and permitting. So we have several NDAs signed with many companies and are actively looking for the next asset.
Great. The next one coming from the Zhang Wu on this side, the Chinese side. He's asking about you mentioned about in the slides a few companies having you are only one of the few companies getting fully funded, fully financed for constructions. So what makes GMIN so special compared to so many others that couldn't get the projects that fully financed?
Yeah, I think it's maybe twofold. It's the fact that we've actually built mines before. So we have a team that has the capability to effectively deliver on construction. So I think that's an important factor that's allowed us to fully finance this project. I think many companies, smaller companies, don't have the teams required to build. So lenders and financiers are always a bit skeptical or weary of lending, providing funds for these companies. So I think that's the major factor behind the fact that we're fully funded, but also the fact that we have a high quality project.
Good to know. And probably one last question here from Mark Lee. This is general asking about the gold price. You've been in the industry for a long time, so what's your thoughts on the gold price this year? Is it we seeing a good trending upwards on the bullish one?
Yeah, no, I think when we see a 2 in front of the gold price, we're getting excited. So in the 2,000 range is a ceiling that we've seen for a long time. So the fact that we're now bumping up against that and looking to go higher, I think it's quite exciting. So I think your intro set the stage quite well. I think there's a lot of insecurity in the financial system, and and investors looking to diversify and have a bit of a safety net through the precious metals space.
Great.
So-
Thank you again for being here with sharing your story. I think that's it for all the questions we have addressed so far. And again, it will be a great honor to have you here, and then we'll follow up with other future questions if the audience have more, and I will let you all know.
Excellent. I look forward to speaking with any additional investor questions in the future.
Indeed. Okay. So I'll let you go, Louis Pierre. Thank you for your time again.
Thank you.